You know Mario, right? Of course you do. And Pikachu. Nintendo is a household name, no doubt about it. But we're not here to talk about high scores or the latest Zelda game, awesome as it is. Nope. We're here to tackle a much bigger, much harder question. So let's get right to it. Is Nintendo a smart place to park your cash in 2026? To really answer that, we're going to break it down using the core principles from Buffett and Munger's Accounting Mastery to see what's really going on under the hood. We'll be looking specifically at Nintendo, that's ticker symbol NTDOY, by the way, and what's been happening from 2021 all the way to now. All right, first up, the peak growth trap. This is all about getting a handle on Nintendo's cyclical nature. You know, if you've ever just glanced at Nintendo's stock chart, it's a roller coaster, right? It's not this smooth, steady climb, and there's a really good reason for that. Nintendo isn't like, say, a software company with predictable money coming in every month. No, it's what we call a cyclical business. Its fortunes ride these massive waves, all tied to big console launches. It's a classic boom and bust story, and you have to understand that from the get-go. So let's just rewind the clock a bit. Think back to 2023, 2024. What was the story with Nintendo? Honestly, it was kind of boring. The original Switch was getting old, sales were tapering off, and the stock, it was just flat. The market was completely snoozing on them. People were even saying, oh, Nintendo's lost its magic. It was that classic waiting period. And then, bam! Mid-2025 hits, and the Switch 2 launches. And I mean, it was an absolute explosion. We're talking revenue growth over 130% in some quarters. Insane numbers. Now, if you're new to investing, you see a number like that and your eyes get wide, right? You're thinking, holy cow, 130%. This thing's a rocket ship to the moon. But hold on a second. This is where the intelligent investor takes a deep breath and remembers the rules. We know this is a cycle. Right now, in 2026, we are standing on the peak of the mountain, and the view is incredible. But the biggest mistake you can make is thinking this peak is a permanent plateau. It's not. The party will slow down. That insane growth is going to normalize. So the number one rule here is simple. Don't ever confuse a one-time product launch with permanent, sustainable growth.
Okay, so if the sales are this up and down roller coaster, you might be asking, why on earth are we even talking about this company? Fair question. The answer, my friends, is found in the balance sheet. This is where Nintendo absolutely shines. We're always looking for what we call a fortress balance sheet. And let me tell you, Nintendo isn't just a fortress, it's a nuclear-proof bunker buried under a mountain.
Get this. As of early 2026, Nintendo is sitting on a pile of cash and investments worth roughly $20 billion. And you want to know the craziest part? The amount of debt they have to offset that? Zero. Zip. Nada. Not a single dime.
I mean, just let that sink in for a minute. They're a creative, hit-driven gaming company, but they manage their money like the most boring, conservative bank you can imagine. And why is this so important? Well, do you remember the Wii U? Yeah, exactly. It was a total flop, a disaster. For most companies, a failure that big, especially if they were loaded with debt, could have been a death blow, bankruptcy. But for Nintendo, they just shrugged, reached into their giant pile of cash, and got to work on the next thing. That cash hoard means they can afford to fail.
This leads to a really cool concept called anti-fragile. It means you don't just survive shocks, you actually get stronger from them. Think about it. For most companies, when interest rates go up, it's terrible news. It makes their debt more expensive. But for Nintendo, it's a party. They actually earn more money from the interest on their $20 billion cash pile. It's wild. When you buy Nintendo, you're not just buying a gaming company. You're kind of buying a high-yield savings account that also happens to own Pokemon.
Okay, but there's always a flip side, right? Having all that cash is incredibly safe, but is it the smartest use of that money? This gets into what we call capital allocation. Is management using that cash to make you, the shareholder, richer? And honestly, we'd have to give them a solid B on this one. They're almost too conservative. They put survival way ahead of maximizing returns. Now, they do pay a decent dividend, which is great, but you have to be okay with this slower, steadier, safer approach.
Next up, let's talk about how Nintendo actually makes its money. It's all about razors, blades, and profit. Now, with revenue going through the roof like it is, you'd think their profit margins would be skyrocketing too, right? But if you dig into the numbers, it's a little more nuanced than that. So what's the deal?
Well, it comes down to a business model that's been around forever, the razor and blade model. You know how it works. You sell the razor cheap to lock the customer in, then you make all your money selling them the blades. For Nintendo, the Switch 2 console is the razor.
that piece of hardware is actually pretty expensive to manufacture. So when they sell it for, let's say, $400, they might only be making a tiny profit on it, maybe $20, $30. Sometimes they just break even.
Because the real money, the gravy train, is the software. The games, those are the blades. When you go out and buy the new Mario Kart for $70, that's almost all pure high-margin profit for Nintendo. So the whole game, pardon the pun, is to sell you the razor so they can keep selling you those super profitable blades for the next 7 years.
And here's the funny thing, the real irony of it all. The absolute peak profit years for Nintendo aren't right at launch. Nope, they usually come 2 or 3 years later. We're talking 2027, maybe 2028. That's the sweet spot. By then, millions of people already have the console, and they're just gobbling up all those high-margin games. So, a little pro tip. Don't freak out if you see profit margins dip a bit this year. That's totally normal. It's just the cost of getting those razors into as many hands as possible.
Okay, so we get the cycles, we get the financial fortress, we get the profit model. That brings us to the million-dollar question, or in this case, the billion-dollar question. What's it all actually worth? We need to figure out its intrinsic value. Let's do some simple back-of-the-napkin math here. Right now, the company's total stock market value, its market cap, is floating around $85 billion. But wait, we know about that $20 billion pile of cash, right? So let's just pull that right out of the equation. If we do that, we see that the market is saying the actual business, the part that makes games and consoles, is worth about $65 billion. The big question is that a fair price? Well, let's put it in perspective. Disney paid $4 billion for Star Wars. They paid another $4 billion for Marvel. Now think about what Nintendo owns. You've got Mario, you've got Zelda, Donkey Kong, Animal Crossing, and the 800-pound gorilla in the room, Pokémon. I mean, can you even put a price on these characters? If you were to sell off that library of intellectual property, what do you think it would fetch? I bet you it's a heck of a lot more than $65 billion.
And that, right there, is what legendary investors call a margin of safety. The idea is that you're buying the business for less than you think its core assets are truly worth. You're not gambling on some far-off promise of future growth. You are paying what seems to be a pretty reasonable price for a treasure trove of world-class beloved characters.
Okay, let's bring it all home. What's the final verdict? Is Nintendo a fortress, a cycle, or a rocket ship? Let's lay it all out.
Here's the bottom line. Nintendo is absolutely a financial fortress. It's got arguably the safest balance sheet in the entire gaming industry. But, and this is a big but, it is not a rocket ship. It's a cyclical business, plain and simple. Right now in 2026, we're right in the middle of the big party for the new console. But we have to be smart and know that this party won't last forever. So, my take? If you already own it, just hold on. You own a piece of global culture that literally pays you to own it through dividends. But if you're looking to buy, don't chase the hype. Be patient. Wait for the cycle to turn. Wait for the headlines to get boring again. Because when it comes to a company like Nintendo, the best time to jump in is always when the plumbers are being quiet.
Thanks so much for joining this explainer. Keep digging into the numbers, keep learning, and remember the golden rule. Focus on the cash, not the hype.